Welcome back. This is the oil market review for the 3rd of February. WTI prices remain stable nearby multi-year high levels as the oil market continues to be closely monitored by traders. Very impressively, WTI has moved in positive territory and reached new highs for the past 6 consecutive weeks, while it has reached higher in the current week also. This report will provide a brief understanding of the key fundamentals currently concerning the oil market, giving traders an insight of subjects to keep in mind. We will also be presenting a technical analysis for WTI, providing our personal understandings of the most recent price action, but also future potential movements. Enjoy the report. In anticipation of the OPEC meeting announcement on Wednesday, the 2nd of February, WTI prices advanced and reached above $88.50 per barrel at some point. OPEC confirmed its intention to adjust upward the monthly overall production by 0.4 million barrels per day for the month of March 2022. In our opinion, the news may have repelled traders as a substantial increase in production may have been anticipated according to data supporting higher demand for the commodity. In our opinion, the decision may have muted the market's reaction in the short term, but may invite some bullish interest looking forward. GDP rates from the US and the Eurozone for the 4th quarter had risen, possibly implying that oil consumed has also increased. It would also be useful to note that the OPEC Plus group had not managed to deliver its production target in December, according to the Financial Times, which has created some doubts among analysts over the group's future production levels. In this case, if demand continues to increase in the following months, but the OPEC Plus group fails to deliver the required supply, oil prices could be lifted at much higher levels. The developments seem to allow for vulnerability in the oil market. An unforeseen event, if materialized, would completely destabilize oil supply levels and may create a spike for oil prices. On a more optimistic note, international oil companies like ExxonMobil and Chevron have benefited tremendously from the recent oil market developments. Both companies announced strong Q4 2021 earning releases, seeing revenues increase for the quarter and the year while also building a strong cash flow. Exxon traded above $81 per share, while Chevron reached $137, both lifted to a new 52-week high recently. We turn our attention to the weekly US oil market data. In the past days, the Energy Information Administration's crude oil inventories showed a drawdown of minus 1.05 million barrels, while the American Petroleum Institute indicated a drawdown of minus 1.6 million barrels. Even though the data did not move oil prices significantly upon release, they may have supported the upward movement observed in the previous days. Moreover, the Baker Hughes weekly rig count is now at 495 active oil rigs as the indicator continues to incline for the past year. With the increase in active oil rigs, we have solid confirmation pointing to higher oil demand. Finally, we would like to close with the current tensions taking place between Russia and Ukraine. This matter is crucial and oil traders should keep developments on the market as a priority, as an escalation of the tensions can potentially push oil prices higher. We move now to our technical analysis. Please note this is WTI's 4-hour chart. A very notable price movement testing the R18750 resistance level is currently observed. Please note this level represents a multi-year high price and has not been clearly breached so far. If the buying momentum continues, we may see the R290 level coming into play, while even higher, we tend to note the R392.75 level. If the upward movement is to start fading away, we could see a return of the price action towards the S184.50 support level. If the selling is strong enough, we could see a direct move towards the S282.40 that was tested for the last time on the 24th of January, making it relevant to recent price action. The final support line stands at S378.60 and was also tested previously in January. We tend to highlight the range between the R18750 and the S278.60 support, which could be key to understanding future price movement. The RSI indicator below our chart seems to be declining at the moment, as the stabilization observed in the recent sessions could have created some selling. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. From everyone here at IronFX, wishes for solid trading.